Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. I saw some numbers. We're doing this on a Wednesday, and there's too much red on the screen for my liking, and I'm sure for many as well. We're going to talk about some lighter kills of last week. What's going to happen when fourth quarter hits for beef? Is there some good opportunities out there for our producers? And why is this cattle market tired? We're going to take a look at that and a whole lot more as we focus on this week's trade. As you can see, Brad Kooima is joining us. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's start out the fact you made the statement about this cattle market being tired. And I thought this is a perfect spot to start to kind of get the base of what you're seeing in this market this week.
Yes, thanks. And thanks for having me on, Susan. I get a kick out of doing this with you. Yeah, the market acts tired. Doesn't that sound like some commodity broker that doesn't know how to right explain it?
There you go.
Yeah, well, yeah, I guess what I mean by that statement is well, here's another cliche that you hear from a commodity broker, and that is that the bull market needs to be fed with good news, constantly to maintain the uptrend. And there is an element of truth to that, right? Particularly when you think about, if you're a cattle feeder like I am, a lot of the people that are going to listen to this are, you're a potential seller every day, right? Because you are long cattle, you have cattle, so you might be a seller every day. Conversely, there may not be someone that wants to go long every day. Nobody's going to make anybody do that, right? But to me, the feeling, and maybe I don't want to break this analytics down to something that, well, I felt this way because I do think there's a little more hard work to it. But I have to say that for a week and a half or so, I've been disappointed in the way the feeder cattle act. I'm also old enough, as you can tell by the lack of hair and what is there is gray, that, I remember the old days when, feeders are the leaders and things like that. And there's some real truth to that, I think, still. And when the corn broke here this last break, 25, 30 cents, and feeder cattle went like $2.50, $3 down with it, that kind of broke the mold of what had been characteristic in the past year. This summer, anytime we'd see a little bit of weakness in the corn, the feeder cattle respond aggressively. So, I think that coupled with, hey, it's the middle of August, right? You've got a market that continues to trade at a discount. The futures market continues to try to tell us, I don't think it's going to be real successful, but keeps trying to tell us that, hey, you know what, this cash market's probably going to go lower because that's why the futures are already building in that kind of a discount.
So you look at that, how much is all this weighing in with, we've got some lighter kills this last week. Is that going to push into this coming week? We get closer and closer, to Labor Day.
The light kills, the Packers been intentional here the last 3 to 4 weeks about slowing this kill up. Now, there is less cattle. First of all, I want to say that. But we're, that last week, 603, that's like 40-some thousand less than a year ago for the same week. It's because they're slowed it up. And, of course, Saturday, we haven't killed a Saturday now for a long time. But boxes are back up to 307 and going higher, in my opinion. And because the demand is good, and because it's Labor Day coming up, and because there's less production. Okay. The Packers get in a difficult spot. Not that I feel a bit sorry for him, but he in 2014, we killed 32 hours a week for months because that's how many cattle we had. All right. Now, poor me, I might have to cut the kill. Good luck. He knows how hard it was to get his help back after COVID. Before they just go boldly going like, okay, guys, we're just, thanks for only working 32 hours a week. I doubt it. I don't think they dare to, but I'm not a Packer, nor will I ever be. But that element is out there. I also like what I hear about the long-term beef business now, and this is whatever. This is the networking that people do like me do. It sounds like the demand is very much alive and well for the fourth quarter, at least domestically. Now, somewhere in there, like Susan, you got to balance this economic news. I think I remember smarting off to you 2 weeks ago that, relief. The Fed told us there wasn't going to be a recession, right? Yeah. I feel, I was like, it made my whole, I wanted to seize up and go like, so now all you hear is this stuff, right? I mean, China's got issues. Stock market traded like crap yesterday and didn't do much better today. So I there's some stuff out there, now. I don't want everybody to say, what happened to my favorite bullish commentator? I'm okay, but I just think, there's a moment here where maybe we got to be just a little careful.
So you brought up China, and I know from an export perspective, I've heard that they might be pulling back a little bit on making purchases because they don't have any money right now. Do you see that weighing in? And the way the dollar's trading as well. having kind of a double sword effect on these cattle.
It's certainly something that I'm worried about.
Okay.
And it's not just for beef, even though I know this program's called Cattle Call. China is a significant enough player in the beef import business that it would be a difference. But think about what kind of difference maker it would be for pork, and for soybeans, and for corn, and blah blah blah. Now I also am not naive enough to know that if China says white, they probably mean black. If China says jump, it's probably time to lay down. They are very skilled at misdirection, so I can't quite fathom, though, the old guy in me is going like, well, look at what happened to our economy during COVID. How in the world can their economy not be affected? And even more so, they've done it. I mean, it's as rotten as it was here. I think it's much worse even there, so we've got to pay attention. It's something certainly that we've got to be sensitive to, I think. I don't think that that's a reason for me right now to abandon the idea that I'm still a long-term bull, but we got to use our head here.
You had mentioned too before we started the program about selling some cattle with less days on them. Considering that everything that's happening globally and what's going on with the packer, what's your thoughts on moving these cattle at lighter weights?
Well, it's a good question and interesting. Your timing's good, always, like always. Early this morning, when just the four brokers were here, and we were just visiting about general stuff about the marketplace, and talking about it. Are you hearing any big cattle getting marketed and stuff like that? There's a couple of big factors here. One is economics. I feed cattle, so I know what these closeouts look like. They are very, very, very profitable right now. I think human nature is such that, are you going to turn down cattle that are going to make a lot of money? Maybe you are, but I think most of us are not. I get it. Corn is cheaper. I understand that replacement feeder cattle are high priced. I get all that, but I do think that there's still a willingness out there to stay current. And if you want to know whether there's proof of that, I would transition to talking about the choice select spread. You can't lie to the freezer, the old saying used to be. So you're looking at a choice select spread in the middle of August. It's $25 over. That's more than double what normal would be this time of year, more than double. So what does that tell you? Either the demand for choice is really good, and it's good, or there's less choice getting offered. And I think that's 80% of the deal. It takes days on feed to make grade. If you don't have a lot of days on feed, you're not going to have as many cattle grading choice and prime. Try to go out there and buy a prime something like a box of prime New York strips or something like that. You'll find out you can't really find them. So that part of the market, the macro stuff, the pull ahead, the extreme currentness, the leverage that gives us, that's still very real.
And who would have ever thought? I mean, $500 plus 3-day-old calves. Looking at the way this corn market is trading, there's a fine line on profitability right now.
Yeah, these are interesting times. Everybody that fed through 2014 and 15 remembers they didn't send out a postcard to tell you that, okay, the market's over. It was over the third week of May in 2015. And we did not improve to profitability till December of 16. At least that's my own records. I think we're in a little different place from the long cycle of cattle supply. And that's because we flipped a switch in 2013, I think, and where it started to rain everywhere. So you had heifer retention, completely stopped the cow kill, whatever. Got real whippy into 14 in the first part of 15, and then we overfed. The biggest problem with the back end of that 2015, we overstayed on cattle. We had high break evens. We fought the market. We were arguing that, hey, we still got tight numbers. And in fact, statistically, the overall supply of cattle in 15 was less than it was in 14. And if you lived through 15, you would say, didn't feel like it to us. But we fed our way into a problem there. That's why I keep coming back to this average weight, the grade. Let's stay current. That's how we get leverage. At the end, I was worried about October. Remember when October was $4 premium in August? I thought, are they guys going to feed for that or are they not? Let's find out. We're going to find out a lot in the next 30 days. Now we're 50 cents apart. So now there's really no incentive, right, to do that. Now, again, December is a premium to December. We'll see how this all plays out, but we've done a nice job of staying current. Let's stay that way.
All right. Well, hopefully we can stay as cool as possible in this coming week and think lots of positive thoughts to our cattle feeders at this point.
Yeah, the weather's a little friendly, obviously. That last round that the poor Nebraska people suffered through with death loss, but this isn't just death loss. It's rate of gain, consumption. Yeah, it's going to be a tough couple of days coming up here too.
All right, Brad, thanks for joining us this week. And as always, what's the best way for folks to get a hold of you?
Well, I think go to our website, kkbtrading.com. We still have a phone here too, 712-722-0023 if you'd like to call.
All right, that's been this week's Cattle Call. And as always, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's the Cattle Call right here on the Rural Radio Network.